Let's talk real estate with Daryl King. And what are we going to talk about today? May stats. They're in. To no one's surprise, housing market conditions continue to evolve in a response to higher borrowing costs. Well, exactly what they wanted, they got. Right? So like the big blue, they just rolled through last night, just taking over everything. So anyway, as we know, on an annual and monthly basis, sales have dropped. Conversely, active listings at the end of May were up month over month and year over year basis, right? More balanced market conditions have provided buyers with more negotiating power, and I'm sure they've been waiting for this for a long time because it's been sellers just this 10, 20, 30 offers. So now there's room for having a great agent to do negotiations for it, right? As a result, while benchmark and average home prices were up substantially compared to last year, selling prices trended to lower on a month-over-month basis. Bank of Canada rate hikes, including the 50 basis point yesterday, June 1st, are impacting home buyers in a short term. There's now everybody a psychological aspect where potentials are waiting for rock bottom price. This will likely continue throughout the summer. However, as home buyers adjust to higher borrowing costs, housing demand will be supported by extremely low unemployment, high job vacancies, rising incomes, and more importantly, record-breaking immigration coming into the country. So, the listings are up, but more things are going to start happening. So for the month of May, we had 7,283 sales were reported on the Toronto Real Estate Board. So that was down by 38.8%. The month before was 41.2. This month was 38.8. I thought it was going to be a little higher. So I was a little happy to see it wasn't as bad as I thought it was going to be. That's down 9% from April. So it went down 9%. These are, April and May are typically our two hottest months. Well, that's changed, right? So the number of new May listings were up similar to last year's level of edge up month over month basis. And then while sales were down and new listing trends flat to slightly up, the number of active listings was up year over year by 26%. So last year there was no inventory. Now you drive around the neighborhood, you see the election signs and you see for sale signs with those sold over asking, right? So things have changed. Market conditions remain very tight to support an overall average selling price of $1,212,806 for May 22, representing an annual growth rate of 9.4%. Now, if we're watching the stock market, we see that thing is tanking out. So still a 9.4 on something very, very secure. And if you look at history, it still goes like this. It may dip, but it's always up, and I'll reflect that after. So, price trends observed over the past 3 months, both in terms of moderate annual growth rates and the recent month-to-month dips, are in line with TRREB's forecast for 2022. After a strong start to the year, the current rate tightening cycle has changed market dynamics, with many potential home buyers putting their purchases on hold. This has led to more balance in the market, providing buyers with more negotiating power. So it's a much more balanced market today, which really I prefer to work in. It's easier to work in because then you can price things correctly instead of all this craziness. And I think most people would agree, right? So not such a bad thing. We're gonna have to pay a little higher for our money, but prices will probably not keep escalating so fast and rapidly how they were, because that was too much. So if we look then for 2021, sales were 11,903. For 2022, 7,283 for a decrease of 38.8 in sales. Listings in 2021 were 18,593, and in 2022, 18,679. So active listings is where the biggest thing is, where in 2021 it was 12,247, and in 2022 it's 15,433 for 26% higher. and the average price is up 9.4%. So, lots of different changes. And I can go into City of Toronto. They had 2,679 sales for an average price of $1,233,748. But remember, they got more condos there than any other area. So that drags their detached houses down. These are averages, including everything. Peel, 1,377 sales for an average of $1,180,883. York Region, 1,100 sales for an average of $1,369,657. And Durham was 1,025 for $995 average. So, a lot of things have changed. And Simcoe, again, the two boards, they reported on the Toronto Real Estate Board, 230 for an average of $1,085,000, but they have the other board. Anyway, for further information on the Toronto Real Estate Board and what's going on now, is a good time to buy, a good time to sell, a good time to invest. It's all of the above. It just depends on where we're at. So give us a call at 905-907-5464. Our home's at darylking.com, and to go enjoy this beautiful weather. Take care. Bye-bye.